studying your last two. I swim med tea when they turned in. The staring down to mute. And can lend a pole that sunky died.
Every capital cost allowance calculation should be supported by proper documentation. Calculating the deduction correctly is only one part of the process. Professional tax preparers also maintain organized records that explain how the calculation was prepared and provide evidence for every amount reported on Schedule 8. Let's look at the normal workflow. The process begins when the corporation purchases a capital asset. As soon as the purchase is made, the first document that should be retained is the purchase invoice. The invoice confirms important information such as the asset purchased, the purchase price, the supplier, and the acquisition date. Next, the asset should be added to the corporation's fixed asset register. The asset register provides an ongoing record of every capital asset owned by the business and helps track capital cost allowance calculations over multiple taxation years. After recording the asset, the tax preparer determines the correct capital cost allowance, or CCA class. This classification decision should also be documented because it explains why a particular CCA rate was used. Once the CC class has been identified, the capital cost allowance calculation is prepared using the applicable tax rules. The completed calculation is then reported on Schedule 8 as part of the corporation's T2 income tax return. However, the process does not end there. After completing Schedule 8, all of the supporting documentation should be organized and stored together. Keeping related documents in one place makes future tax preparation much easier and allows the calculations to be reviewed whenever necessary. A well-organized file typically includes several important documents: purchase invoices, the fixed asset register, Schedule 8, delivery receipts, installation reports, where applicable, financial statements, and the working papers used to prepare the capital cost allowance calculation. Together, these documents explain how the deduction was determined and provide a complete record of the corporation's capital assets. One of the biggest advantages of maintaining organized documentation is consistency. When the next taxation year arrives, the tax preparer already has the information needed to determine opening undepreciated capital cost balances, review prior year calculations, and continue preparing Schedule 8 accurately. Another advantage is efficiency. When records are organized, information can be located quickly, reducing the time required to prepare future tax returns and helping ensure that calculations remain consistent from year to year. The key lesson from this slide is simple. Every capital cost allowance claim should be supported by organized documentation. Maintaining purchase invoices, the asset register, Schedule 8, delivery records, installation reports when applicable, financial statements, and working papers helps verify asset purchases, support CC classifications, explain calculations, and ensure accurate reporting on Schedule 8. Developing good documentation habits early will make future tax preparation easier, improve the accuracy of capital cost allowance calculations, and help maintain complete, well-organized records for every capital asset owned by the corporation. Collecting the correct documents is just as important as preparing the capital cost allowance calculation itself. Every number reported on Schedule 8 should be supported by organized records that explain how the calculation was prepared. Let's look at the essential documents that every tax preparer should maintain. The first and most important document is the purchase invoice. The purchase invoice confirms that the asset was acquired and provides important information, such as the purchase price, supplier, and acquisition date. Next is the delivery receipt. This document helps confirm when the asset was delivered to the business, and may assist in determining when the asset became available for use. For assets that require assembly or setup, an installation report may also be important. This document helps demonstrate that the asset was installed and prepared for its intended business use before capital cost allowance was claimed. Another essential record is the fixed asset register. The asset register tracks every capital asset owned by the corporation and records important information such as the CCA class, acquisition date, original cost, and the remaining undepreciated capital cost from year to year. Of course, the completed Schedule 8 should also be retained. It provides the official record of the corporation's capital cost allowance calculation for the taxation year. The financial statements and general ledger should also be maintained because they help reconcile the accounting records with the tax calculations and support the amounts reported on the corporate income tax return. Finally, keep all working papers used during the preparation process. These may include calculation worksheets, notes explaining classification decisions, available for use reviews, and any supporting schedules prepared while completing Schedule 8. When all of these documents are organized together, finding information becomes much easier. Instead of searching through multiple locations, the tax preparer can quickly retrieve everything needed to review the capital cost allowance calculation or prepare the next year's return. A good workflow is simple. First, collect the supporting documents. Next, review them carefully. Then calculate the capital cost allowance. Complete Schedule 8. And finally, organize and file all supporting records together. One of the most common beginner mistakes is keeping the completed Schedule 8 calculation, but failing to retain the supporting documents used to prepare it. Without those records, it may be difficult to explain how the calculation was performed or verify important details in future taxation years. Professional tax preparers understand that the calculation and its supporting documents should always be kept together. The key lesson from this slide is simple. Every Schedule 8 calculation should be supported by a complete documentation file that includes purchase invoices, delivery receipts, installation reports when applicable, the fixed asset register, financial statements, the general ledger, Schedule 8, and all supporting working papers. Organized records make future tax preparation easier, improve consistency, and provide clear support for every capital cost allowance claim. Developing this habit of organized record keeping will save time, reduce errors, and help ensure that every capital cost allowance calculation remains accurate and well supported year after year. Good record keeping is one of the habits that separates experienced tax preparers from beginners. An accurate capital cost allowance calculation is important, but it is only part of the job. Professional tax preparers also ensure that every calculation is supported by complete, organized records that can be easily reviewed in future taxation years. Let's summarize the complete documentation process. Everything begins with the purchase of a capital asset. As soon as the asset is acquired, the supporting documents should be collected and organized. This includes the purchase invoice, and any other documents related to the acquisition. Next, determine the correct capital cost allowance, or CCA, class. The classification decision should be documented so that it is clear why the asset was assigned to a particular CCA class and why the corresponding CC rate was used. After the classification has been confirmed, calculate the allowable capital cost allowance using the applicable tax rules. The completed calculation is then reported on Schedule 8, which becomes the official record of the corporation's capital cost allowance claim for the taxation year. Once Schedule 8 has been completed, file all supporting documents together. Keeping related records in one organized location makes future tax preparation much easier and allows calculations to be reviewed whenever necessary. The next step is to maintain the corporation's fixed asset records. Updating the asset register each year ensures that the remaining undepreciated capital cost, or UCC, is carried forward accurately, and that future capital cost allowance calculations remain consistent. Well-organized records also make preparing future corporate tax returns much more efficient. Instead of recreating information each year, tax preparers can simply review the existing files, update the current year's activity, and continue the capital cost allowance schedule with confidence. Before considering the documentation complete, experienced tax preparers ask themselves a few final questions. Is the purchase invoice available? Has the asset register been updated? Is the correct CCA class documented? Has Schedule 8 been completed? Have all working papers been saved? Are the supporting documents organized? And can everything be easily retrieved in the future? If the answer to each question is yes, the documentation file is likely complete and well organized. A professional documentation file typically contains the purchase invoice, delivery receipt, installation report when applicable, the asset register, Schedule 8, financial statements, the general ledger, and all supporting working papers. Together, these records explain every capital cost allowance calculation and provide a complete history of the corporation's capital assets. The most important lesson from this chapter is simple. Good record keeping is an essential part of good tax preparation. Keep complete supporting documents for every capital asset. Document the CC classification and calculations. Organize Schedule 8 and all working papers. Maintain updated asset records. And ensure that everything can be easily reviewed in future taxation years. By following these professional habits consistently, you'll prepare more accurate corporate tax returns, maintain reliable capital cost allowance records, reduce future errors, and make Schedule 8 preparation faster, easier, and more efficient year after year.